Hi, this is Stephen here from Share Navigator, which are options and futures trade update for October the 30th. So we're just going to look at the charts for today and we're going to discuss our existing position. We've got a short put out on SPY at the 640 strike, so down here. So in other words, what we did was we agreed to insure the value of SPY to the value of $640. And as you can see, it's trading at 687. So that trade expires on November the 21st. In order for us to be assigning that particular trade, SPY would have to fall quite a lot. And actually, we have a 99% chance of that trade being profitable. So at the moment, we're doing very well. We're up about $350 per contract. We've the potential to make around another $150 profit. So we're just going to stick with that trade for now. Interestingly enough, though, overnight, there was news spilling out of the US-China trade relations and all that type of thing. And really positive news. The US agreed to reduce tariffs in China, and then the rare earth metal issue seems to be resolved. You would have expected a bit of a bump in the market, but actually the market futures are showing flat to slightly negative. So this might be kind of a sell the news event. So a sell the news event is when, the market expected that anyway. It's already built into the price, so maybe a bit of profit taking happens. We'll wait and see. It's early days yet. It's the futures market. It's still kind of just 3 a.m. Eastern time at the moment. So this is very, very early days. So we'll see how that pans out throughout the day. Any pullback, the way we look at it is, I think the market just forages higher right into the end of the year. So we might be able to sell another put option if that opportunity arises. So we'll just wait and see how that pans out. The next trade we're kind of lining up that's probably closer to being executed is the crude oil trade. So this is where we're actually going to sell the short put or sell the put on the crude oil futures for the January contract. And the reason I'm just looking at the chart now, I just want to show you what I'm waiting for. So you can see here, we did this trade. We've done it already, made over $500 in profit on it, or $400 in profit. We've had this rally off a low with crude oil, but it failed to break above this 50-day moving average. It's since retraced back to the 20-day moving average here. And as you can see, just these previous 2 days here, the lows were still getting lower, albeit by a very small margin. And today it got tested again. We didn't quite take out yesterday's lows. So I want to just make sure that trend is over, because if you look at what happened as well, crude oil came down to this level just under 56 and made an effort, but it never really took out this kind of resistance area here. And then if you look at that kind of these series of lower highs that I'm circling here, so the trend is still clearly down if you were to join the tops there. And I just want to wait and see, do we actually just start revisiting down here? And if we do, then it'll be an opportunity for us to sell those put options and generate even more premium. So that's what I'm really holding off for here. We could jump out into the December put option contract for the January future and drop down to 50 and sell the $50 strike, and we generate about $500 in premium on that, which is very, very good. So if we wanted to do that, we could. I think there's a fair amount of safety there. But if this actually falls and starts retesting the lows here, we could put on that same trade in a few days' time if that event does occur, and probably generate over $1,000 in premium. So that's the reason why I'm waiting. If we get consolidation here and there's a bit of a breakout, in other words, if this high gets taken out, then I'll probably change my mind. But up until that point, I just want to see, really, do we start trending down here again? And this 20-day moving average, which is acting as support at the minute, does that get broken? So I'm watching it closely. If it's a situation it changes, I'll let you know. So we're lining up two trades. The first one is that expires in the end of November, and that's the 55 strike. That's generating $500 in premium. The second one, which is less risky, will be going out into the December put option for the January contract. And in that situation, we'd be looking at selling, closer to 52.50 and generating a lot of premium in there. So one or two trades lined up here, just not ready to pull the trigger on it just yet. As regards then, just moving on very quickly onto the metals into terms of silver and gold. Bit of a reprieve yesterday for gold. So yesterday was the first day in a while there wasn't a lower low. But today you can see there now we've started to retrace again there. So as I said to you before, I think gold will take out those highs again, and the same with silver. But I do think that we could be in for a further correction first, and that's what I'm waiting on as well. Just the payoff isn't there at the moment, and the risk and rewards, just in case it does break down. So I would like to see, another 5 to 10% come off the value of gold before I go long on it. Okay, this is Stephen with your option and futures update. Thanks and bye for now.